Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a new day and after yesterday's flat set of gains, the GIFT Nifty is indicating a very quiet start in today's trading session too. Well, it is the weekly expiry day since tomorrow is a holiday, so volatility is likely to be on the higher end too. But yes, the good news seems to be Donald Trump indicating that a trade deal with India could be soon on the cards. Earlier, Scott Bessent had also indicated the same, so the affirmation could be taken as a positive for our own markets. However, border tensions that continue to cast a shadow. Yesterday, Prime Minister chaired meeting with Defence Minister, NSA, CDS and Armed Forces to discuss about the cross-border linkages. So we will watch out more developments in this front too. Globally, however, the screen is quite green. US markets have ended higher overnight. Meta and Microsoft will be reporting their quarterly as a results today. So that will set the tone of the trade further into the trading session. And even the Asia Pacific markets that have started the day largely on a higher note. We'll also take some stocks in focus. Bajaj Twins, Trent reacting to their Q4 results. And of course, the stock in focus, that is your IndusInd Bank, after MD and CEO has resigned with immediate effect last night. The stock could see some pressure in today's trading session, so we'll watch out for IndusInd Bank in today's trade. We'll take up more stocks in focus. We'll take up your stock related queries too, so keep posting them on our live feed and we'll take them up shortly. Before we move further into the show, let's quickly take a look at the top headlines. Stocks rally on Wall Street after the US Commerce Secretary says that one trade deal was done but refused to name the country. The Dow surges over 300 points while the Nasdaq ends nearly 100 points higher. Stocks in Asia Pacific open largely higher. Investors are also waiting a slew of economic data. Meanwhile, the GIFT Nifty is indicating a quiet start for our own markets. Crude prices fall 2% as investors await OPEC and its allies to boost output. Meanwhile, gold prices also fall nearly 1% as trade tensions between US and China ease. And in a development, Sumant Katpalia has resigned as the MD and CEO of IndusInd Bank, citing moral responsibility in relation to controversy surrounding the bank's derivatives portfolio transactions. His resignation was submitted last evening. US President Donald Trump says that US will strike a deal with India soon. His comments come after Secretary Scott Bessent said, quote unquote, that we are close on India. All right, if you look at yesterday's trading session, Nifty did end flat in the green above that 24,300 mark. If you look at the broader end of the markets, that also rose marginally higher. And the sectoral indices which contributed to Nifty's gains included the likes of IT and consumer durables. On the other hand, pharma and metal stocks, they saw significant declines. RIL also contributed to Nifty's gains, reacting from its Q4 results. Tuesday also we saw gains, and Monday also we saw significant gains from the index heavyweight. Today, however, we'll watch out for some Q4 results. Adani Power and Federal Bank will be reporting their Q4 results, so we'll watch out for those two in today's trade. Apart from that, some cues that will set the tone of the trade today. First is your fund flows data. Yesterday, once again, FIs continue its buying spree into the Indian equity market for the 9th consecutive session. They have bought stocks which is worth about 2,300 crore rupees in the cash markets. On the other hand, DIIs have also stood at buyers, buying about 1,369 crore rupees in the cash markets. On the other hand, if we look at the option cues data, that tells a little of a different story, given that we had a very quiet and a flat trading session yesterday. Nifty put call ratio has fallen to about 0.94 from 1.22 in the previous session, so some cautiousness can be exhibited in the markets today. On the other hand, the F&O ban list, RBL Bank continues to retain in the F&O ban. On the other hand, none of the stocks have been removed from the F&O ban list. Now, just a couple of minutes before we hit the open, but let's quickly get on board with our technical expert of the show. Joining me is Ruchit Jain of Motilal Oswal Financial Services. Ruchit, good morning. Yesterday markets have been quiet. What's the next trigger that the markets are waiting, and help us understand the levels on Nifty and Bank Nifty levels too?
Yeah, hi, very good morning, Lovisha. Last few trading sessions we have seen, especially the second half of April, has been good for our markets, where our markets have seen a very sharp recovery from the lower levels. Now, although the near-term trend continues to remain positive, but I think the momentum readings on very short-term charts are a bit in overbought zone. So ideally, whenever we see such situations where the trend is positive but momentum readings are overbought, we generally tend to see a bit price-wise or a time-wise corrective phase where index trades within a range for some days till this overbought readings get cool off. But then on Friday's trading session also we saw that when the dip was there, the previous resistance of 23,800, 23,850 became a support for the market. So I think on a positional basis, 23,800 remains a make or break level. Until that is intact, we would think that the overall trend continues to be positive. But on the higher side also, the gains should be limited from here on, at least for next few days. Because if you look at the entire correction from the all-time high to this recent low of 21,700, then 61.8% retracement of this entire correction is coming around 24,550. So I think that's where the immediate resistance is placed. So if you look at from a risk reward ratio perspective, then it seems that no, for fresh buying, no, it's not favorable levels for the index. So I think some consolidation could be expected in the index in this range. But yes, there are a lot of sector specific or stock specific movements that we can see. The banking NBFC continues to be an outperformer positionally. The defense space has been doing well, where we are witnessing a good price volume action. So I think at current juncture, rather than index, it would be more of opportunities in sectors or stocks could be seen where we expect the positive momentum to continue.
Okay, all right. Let's talk about IT stocks a bit. Yesterday they were one of the top performers, Ruchit. Do you believe that they are something to be avoided at this point of time, or does mid-cap IT stocks offer some level of comfort given that we have a cautious FY26 guidance before us?
So I think more or less, prices are trying to factor in all the negative things. We have seen a huge underperformance in the Nifty IT space, because mainly because of the rising trade war tensions which were there at the first half of April. So I think that uncertainty is now reducing with many steps that the U.S. government has been taking off late. So I think that would lead to some positive momentum or a pullback move in the short term, where we do not expect any run-up rally in the IT stocks to happen anytime soon that it would see a significant outperformer. But at least I think the price-wise corrective phase has been done in many of the IT names. So possibly that after this price-wise corrective phase, some pullback moves could be there and we would see some consolidation in the IT space.
Okay, some consolidation in the IT space. How does the auto ancillary space looks like? The likes of Bharat Forge and Samvada Motherson, given that Trump has also indicated that there will be an easing of auto tariffs. So what do you think on that space?
So I believe that auto and auto ancillaries so far have not shown any signs of outperformance. The markets which have seen a pullback move from this low of 21,700 to 24,300, 400 now, auto has been more of a market performer and not an outperformer. So entire auto space, except I think Eicher Motors, which is not too far from its 52-week high, we have not seen any kind of run-up rally or any kind of significant price volume action happening in the auto space in this pullback. So there are no signs of outperformance coming. But yes, I think if market continues to gradually move up, then we can see a slow and gradual pullback move happening in stocks.
Okay, all right. Let's talk about one stock in focus, Ruchit, because IndusInd Bank CEO Sumant Katpalia there has resigned with immediate effect. He has undertaken moral responsibility amid omissions of derivatives discrepancy. So what's the next support level that we can eye out for IndusInd Bank? With the stock could see some pressure in today's trading session.
So, Lovisha, if you see, usually market participants do not like uncertainties, and especially when there are some corporate governance type issues. So, I think no, as of now, we would advise to keep a wait and watch approach for this stock. Definitely, markets would try to think whether, since the management has already disclosed all the amount that would be, in that by how much that results would be impacted, and what since the new management would come in, then who would be the new management? That needs to be seen. So I think until that clarity is there, we think that no stock could continue to remain under pressure. And technically, 880, 900 continues to be immediate resistance for the stock. Only if the stock manages to surpass 880, 900, then we would see some fresh buying interest in the stock. Otherwise, I think within the banking and NBFC space, there are a lot of other opportunities we can see amongst the heavyweight stocks, such as ICICI Bank is there, Kotak Bank is there, which are doing quite well comparatively. So I think that relative outperformance would continue over there.
Okay, 889, 890 levels that we need to watch out for IndusInd Bank. Let's talk about Nifty Realty Index also. Yesterday it ended with about 0.5% gains despite what we saw from Oberoi Realty reporting weak set of figures. How does it look like, from a 3 months perspective, given that we have a easing rate scenario?
So I think, no, in spite of that easing rate scenario which has started, we have not seen any fresh buying interest majorly in many of the realty names, except one or two names such as Loda is there, Phoenix is there, where relatively the price-wise correction was less in the recent market's corrective phase. But the sector as a whole, if you look at Nifty Realty Index, then it is not yet surpassed its 200-day moving average resistance. And also in this pullback move, just like how we spoke about the auto names, that it has not been the sector which is taking the leadership in spite of interest rate cut cycle which has started. So I think in absence of leadership coming in, many of the stocks off late. So I have the similar view what I have on auto, that this could be a market performer, but not expecting significant outperformance coming in from the realty stocks.
Okay, market performer, that's what you're anticipating, Ruchit. Ruchit, what about the defense space? Are you bullish on the defense space? 3 days of consecutive rally we're seeing due to border tensions. How do you expect investors to approach this particular space? Is it a right time to buy?
Yes, in fact, last 2 3 days we have been recommending very aggressively to go long on defense stocks. Since we have seen some good buying interest in the stocks coming, and it's not only last 2 3 days. Even if you look at positionally since the second half of March month itself, the defense stocks have started witnessing good price volume action happening. You see stocks such as HAL is there, Mazagon Dock is there, where BDL is there, where fresh breakout has been seen. So good relative outperformance has been seen in the defense, and this entire outperformance of buying interest has been supported by very high volume. So defense stocks certainly, I think, still at current levels. Also, there are few stocks, where the risk reward ratio is favorable, and we expect that uptrend to continue.
You expect the trend to continue. Let's take one more stock in focus, that is your Bajaj Finance, because that did report a good set of numbers. We saw that the net profit has risen about 19% year on year, and even the NII has seen a growth of about 22.4%. The company has also announced a bonus issue in the ratio of 4:1 and has approved a stock split in 2:1. They've approved a dividend of 44 rupees per share for FY25 and a special dividend of 12 rupees per share as a one-time gain. Ruchit, at a time when we are seeing another NBFC player like Shriram Finance disappointing street, how do you peg Bajaj Finance with its strong set of numbers and of course its bonus and the stock split?
So I think the prices have already seen a good rally off late. We have seen the stock gave a breakout from about 4 years of consolidation in the month of January, when the stock headed about 7,500 mark. So I think this remains more of a buy and dip stock, where any kind of declines towards the support of 8,500, 8,400 it comes, then the risk reward ratio would become favorable. But definitely the mid to long term structures are still looking positive. So any existing long positions, if there are, then I would recommend to continue to hold on from with mid-term perspective. But fresh buying, if has to be done, then one should keep more of a buy and dip approach for the stock.
Buy on dips approach for the stock that is recommended for Bajaj Finance. Just less than 5 seconds before we go to the open, the GIFT Nifty was indicating a quiet open, but however the pre-open rates were pointing out for a good start for the markets. It's the weekly expiry day, so let's watch out for the numbers. First rates coming on your screen, we're seeing a cut of about 0.1% at this point of time. Flat opening for Nifty 50 below that 24,300 mark. On the other hand, Sensex has opened in the green with about 0.1% gain. Flat in the green at this point of time for Sensex. So some volatility is there on the headline indices front at this point of time. Let's look at some of the sectoral indices, how they stack up on the charts at this point of time. Bank Nifty index that is opened with about flat gains at this point of time. Nifty Auto Index with about 0.5% gains. Bank Nifty with about 0.1%. On the other hand, Nifty Mid Cap we are seeing flat in the green at this point of time, 0.1% gains coming in from the Nifty Mid Cap space. On the other hand, Nifty IT Index, which was one of the sectoral performers yesterday, is seeing a cut of about 0.1%, flat in the red at this point of time. And India Wix, since the volatility and the range bound movement between the headline indices is on the higher end, India Wix has jumped about 2.5% at this point of time. Let's look at some of the Nifty gainers and losers. Dr. Reddy's Lab seeing a gain of about 0.8%. Larsen and Toubro with about 0.5%, 0.5% gains coming in for L&T. Cipla also seeing a gain of about 0.5%. So pharma indices are leading from the front of the Nifty 50 pack. Nifty Pharma Index, if you look like that, also is trading with a good set of gains. On the other hand, top losers on the Nifty 50, Bajaj Twins not reacting positively to its Q4 results, seeing a cut of about 4.9%, and Bajaj Finserv and Bajaj Finance seeing a cut of about 3.4%. On the other hand, Trent, after yesterday's upbeat margin beat, it is cooled off from its higher levels, and it is seeing a cut of about 3% or so. Other than that, Tata Motors, SBI also trading with a cut of about 1.9 to 1.3% each. But yes, one stock in focus, that is your let's take one stock in focus, that is your Gensol Engineering, which is you're seeing a cut of about 5% lower circuit once again. Do you expect, how much of a downside do you expect, Ruchit, going from here on for Gensol Engineering?
I think no, since it's more of a corporate governance issue in the stock, so I don't think that there would be any kind of fresh buying interest would come in the short term. So it's better to avoid any kind of bottom fishing or anything in the stock, since we have also seen that the stock is continuously on the lower circuit. So any opportunity if we get to exit any existing positions are there, then they should also look to exit from the stock. But certainly not a stock where any contra trades or bottom fishing should be done.
Okay, all right. One of the top Nifty losers at this point of time is also Trent, where we are seeing that consolidated profit has dropped about 55%, and the other hand, revenue has jumped about 28% year on year. The board has also approved a dividend of about 5 rupees per share. Yesterday, investors did cheer the EBITDA margin beat, but Ruchit, what is the next target that we can eye out for? Because valuations still remain a key concern for investors.
Price-wise, we have already seen a decent correction from its high, over last in this entire correction since last 6 months. But the stock is yet to surpass its 200 DMA resistance. So I think post numbers, if we see any kind of follow-up moves, which is not there as of now, but in case of any kind of follow-up move is there, and the stock managed to surpass that 5,600, 5,650 resistance, which is the 200 DMA, then we would expect some positive momentum to coming in the stock. But for now, I think after numbers today, there is no follow buying that is seen, at least in the opening. So one can keep a wait and watch approach for the stock.
Okay, wait and watch approach for the stock. Let's take some viewer queries at this point of time, which is popping up on our live feed. First query coming in from Naveen is asking the view on Varun Beverages. Varun Beverages, from February lows, it is up about 20%. However, it is trading, lower ahead of its Q4 results. Ruchit, how do we approach this counter?
So the longer term trend still remains positive, but in short term, we have seen more of a time-wise correction which is happening in the stock. Last few trading sessions, I think we did see some pullback move, but again, the stock resisted around its 200 DMA, which is around 560, 570 range. So only if the stock managed to surpass that 560, 570 resistance, then we would expect some up move to come in the stock. But yes, nothing much concrete is there on the near-term charts. But in case if it's a long-term view, where we can keep a view of maybe 6 months and beyond, then one can continue to hold on the stock.
Okay, one can continue to hold on the stock. Let's move on to another viewer query. Kishore is asking the views on Sudarshan Chemicals. How does the view counter look like? Because from a 1 month perspective, the stock has given out about 3% gains. But if you look at from the 6 months charts, it is down about 7% or so from December highs.
I think a short-term correction could be seen, where 1,950 would act as a support zone on corrective dips. But yes, I think price-wise, mainly the corrective phase, the broader corrective phase, I think has been done, because the stock has of late started forming this high top, high bottom structure. So if he's looking for fresh buying in the stock, so maybe any kind of dip, if we get towards that 950,000 range, one can look for buying opportunity on this over there. But within the chemical basket, I think UPL or even SRF is there, where we have started witnessing a good high top, high bottom structure of late. So I think such stocks can show a good relative outperformance. But for Sudarshan Chemicals, the risk reward ratio could become favorable if we get it somewhere in the range of 950 to 1000.
Okay, 950 to 1000 support levels. Let's move on to another viewer query. Ratna Kumar Solomon is asking the views on Reliance Industries. He's seeing a bit of a profit since he entered the stock about 1180. She's asking whether or not he should book profits at this point of time or should he hold the stock. Today, the stock is seeing a bit of cool off, but since the past 2 days, it's reacting well to its Q4 results. Ruchit, what is your target for the stock?
Well, I would advise to continue to hold on with some broader perspective. We have already seen a good corrective phase in Reliance Industries, and after many days, the stock has managed to surpass this 200 DMA, post its numbers, and also we can see that volumes have started increasing gradually. So I think somewhere the corrective phase has been done in the stock. From a near-term perspective, you can expect levels around 1500 to 1530, where the previous swing highs would come in. So around 1530 would be good if you want to book profits. Then you can take a review over there.
Okay, all right. Not hold at this point of time. Let's move on to another viewer query then. The first, Anune Iriki is asking the view on Amber Enterprises. He's bought it at 66.27. He's asking whether he should hold or shift to PG Electroplast. What is the view on your both the counters? If you look at Amber Enterprises from 8,000 to about 62, 63, it has dropped. What is your view on the counter? He's seeing a bit of a profit at this point of time.
So Amber has seen some correction from the highs, but if I just look a bit mid to long term structure, then the longer term structure does not seem much negative, because the correction which also has been there, it's more in line with what we did see in the broader market since the month of October. But we have not seen any kind of volume based selling happening in the stock. So in absence of volume based selling, I think once this time wise corrective phase is over, you can expect a resumption of the uptrend. So I would recommend to hold on Amber with a bit mid term perspective, not very short term where some consolidation could be seen. But overall, even PG Electrical Electronics has a good positional chart structures where the uptrend still remains intact. But still, since already there into Amber, and the structure is not negative, I would recommend to continue to hold on this.
Okay, continue to hold on this. Let's move on to another viewer query. That is, Alex is asking the views on Premier Explosives on the defense theme. The 1 month chart is showing quite a stellar rally, Ruchit. What do you expect the near term holds for the stock?
So I think yes, the short-term trend remains positive. Last couple of trading sessions, we have seen the stock has given a good up move supported by rising volume, so which could lead to see some positive momentum over next few days. Today, although the stock has witnessed a bit dip, as this is mainly because we have already seen a run-up in last two trading sessions. So any existing positions can be held on, and one can expect target somewhere around 520 to 530.
Okay, all right. Let's move on to another stock in focus. Ambuja Cement reacting positively to its Q4 results, where we saw that the profit has risen for about 74% year on year, and even revenue has posted risen about 19% year on year. Ambuja Cements, any views on the counter, Ruchit?
It seems more of a consolidation only, because we have seen that the stock recently also, which has witnessed an up move, has started high top, high bottom structure, but the volumes are not that high along with the price of move. So I think some more time-wise correction could be expected. Good support around 500, 480 range, which was the last higher bottom which was made on the stock, and the higher side, 600 remains a resistance. So do not expect any significant move on either side, but rather a consolidation within this broad range could be seen in Ambuja Cement.
Okay, consolidation within a broad range on Ambuja Cements. Let's move on to another viewer query. Satya is asking the medium-term view on Dodla Dairy. He's asking if there is any fresh long entry positions that he can make at this point of time. If you look at 6 months charts, the trend is quite negative. Ruchit, what does the near-term hold?
So the stock has not shown any kind of signs of any trended phase in the near term. Last time when it corrected, the stock managed to find good support around 960 mark, which positionally remains a support. So I think just wait for some more time, maybe around 960, 970 if it comes, then you can take a review whether risk reward ratio or the stop losses would be smaller.
Okay, all right. Let's move on to another viewer query. That is your Amit Kumar Srivastav is asking the view on Tata Technologies. He's bought the stock at 680 rupees. He's asking whether he should hold the stock at this point of time. He's seeing a bit of a loss then since his entry price is at 680. What is your advice, Ruchit?
Post listing, we have not seen any kind of outperforming signs in Tata Technologies. In fact, the low top, low bottom structure is still continuing, and we have not seen negation of that yet. So I think the stock rather does not look that positive, but from the IT space, no, couple of other names such as Coforge, I think could be a better bet, no, rather than Tata Technologies over short to medium term. So any kind of wait for some pullback moves, any kind of pullback moves that you get in the near term, then you can look to switch from Tata Tech to Coforge.
Okay, Tata Tech to Coforge you're suggesting at this point of time. Let's move on to another viewer query. Pankaj is asking the views on Emphasis for the short term. If you look at from 7th April onwards, the stock has seen a good rally, 20% uptick. How much more of an upside do you expect to go from here on?
So the stock has seen some pullback move along with the move in the IT space, which you have seen. Now the immediate hurdle for the stock is coming around 2640. So I think in the near term, one can expect levels around 2640 on Emphasis.
Okay, 2640 or so levels. Let's move on to another viewer query. Bhumika Parekh is asking the views on Una Minda stock. Uno Minda, how does the stock look like? If you look at from the 1 month perspective, the stock hasn't really moved anywhere. What is your view on the counter? Can we expect any breakout?
Not yet. The volumes are also very low if you look at last few days, and even in the up move where the broader markets or the mid cap, small cap space has seen some pullback move, the stock has not managed to surpass its resistance of 940, 950. So as of now, does not look to be in any kind of significant breakout would happen anytime soon. But 950 to 750, I think this is a broad range where the stock would continue to consolidate.
Okay, all right. Let's move on to another viewer query then. Nitin Shaji is asking the views on Bajaj Healthcare. Past 1 month, the trend is quite negative. Ruchit, what do you expect? Should we expect more downside from here on?
So a bit volatility definitely is there in the stock, but longer term trend is not negative for the stock. Of late, in the month of February, we witnessed a series of price up moves supported by high volumes, and in this decline, we are not witnessing any kind of volume-based selling happening in the stock. First support for the stock is coming around 520, much closer to what it's currently trading because that's a 200 DMA for the stock. And in case if that is breached, then 450 to 430 would be the next support range for the stock. So I think if one has a bit longer term perspective, then one can continue to hold the stock, and declines towards the support can be used as an opportunity to buy gradually. But of course, not in the near term. But no, one should have a view of at least 6 months or more in this.
Okay, all right. 520 is the level that we need to watch out for Bajaj Healthcare. Let's move on to another viewer query. That is your Gitu is asking the views on Sharda Motors. How does the stock look like? Past 1 month, if we look at only 6%, 6.2% gains coming in for the stock. How does the stock look like from a medium term perspective, Ruchit?
So I think more consolidation has been seen in this stock too. So not expecting any significant up move in the stock in the short term. But from medium term perspective, if you look at the price volume action, then it seems that the stock until it gives a breakout above that 1900 mark, we would not see any kind of significant trended phase. So some consolidation could be seen. A breakout above 1900 should then lead to a good momentum in the stock.
Okay, all right, a good momentum in the stock. Let's move on to another viewer query. Varsha is asking the views on Indigo. Past 6 months chart, if you look at Indigo, then the trend is quite positive. How much more of an upside do you foresee, Ruchit, on the counter?
Momentum readings are indicating signs of some pullback move in the stock. So some consolidation can be seen in the near term in Indigo. Although the longer term trend still remains positive, but from a near term perspective, I think 5100, 5000 would be the immediate support, whereas 5600 would continue to be resistance. So expecting some consolidation happening in Indigo.
Okay, some consolidation happening on Indigo. Debu K is also asking the views on Action Construction. From March lows, it has seen a bit of a pullback, seeing a gain of about 20% or so. Ruchit, what is your view on Action Construction?
So I think it's again one of the stock where some consolidation is happening on the stock, and the breakout for the stock would be above 1150, 1170. Breakout would be about 1350 mark. So I think till it is below 1300, not expecting any significant move on either side, but rather some sideways move could be expected. If any existing long positions are there, then it could be held on. Fresh buying triggers would come once the stock surpass 1300 mark.
Okay, all right. Let's move on to another viewer query. Debu is also asking the views on MOS chip. How does the stock look like most chip technologies? Because it did reach a high of about 176 or also on 22 of April, but it has cooled off from there on. What can we expect next?
Not expecting any significant move. The stock is recently, I think, listed in the NSE segment. But no, price volume action indicates more of a sideways trend for the stock in the short term. So, but the existing positions are there, then one can continue to hold on the stock because the downside also here seems to be very limited. I think 150, 148 continues to be immediate support for this.
Okay, all right. Let's move on to another viewer query. Anune Iriki is asking the views on Garden Reach. What is your view on the counter, Ruchit? Because I know you've been quite bullish on the defense space itself, but what is your next target on Garden Reach?
So the stock has given a breakout above 1800 mark in yesterday's trading session, which was the swing high. And any kind of dips now around 1800 would act as a support. So I think 1800 now remains a very crucial support for GRSE. And on the higher side, a gradual up move towards 2100 to 2150 could be expected.
Okay, 2100 could be expected. Let's move on to another viewer query. That is your Satya is asking the views on Khatan Chemicals. How does the stock look like on the counter? A very strong breakout with about 13% gains or so in the past 1 month, Ruchit.
Not tracked that stock of late, so won't be able to comment on this.
Okay, all right. All right, let's move on to another viewer query. That is your Harsh is asking the views on Bajaj Fincare. How does the stock look like at this point of time? Bajaj Finserv, that's what he's asking at this point of time. Since we discussed about Bajaj Finance also, what is your view on the holding company, which is your Bajaj Finserv?
So I think overall trend remains positive for Bajaj Finserv, but in the short term, no, as we even discussed for Bajaj Finance, the stocks have already seen a good run-up move. So I think no, just like Bajaj Finserv and on Bajaj Finance, what we had a view of buy and dip strategy, I think similar view would have on Bajaj Finserv as well. Major support for the stock would coming around 1800 to 1850. So no, wait for some dips towards that level 1800, around 1800 level. If it comes, then one can look for buying opportunities over there.
Okay, all right. Since majority of the pharma stocks are also gaining limelight today itself, Ruchit, what is your view on the pharma counter and the likes of Dr. Reddy's and Cipla, given that there is a 90-day pause in tariffs also? Do you expect that, this is a good time to buy these stocks?
So I think one can keep a stock-specific approach within the pharma names. Sun Pharma is looking positive, where the stock has seen a good rise in volumes in last 2 or 3 trading sessions. Technically, also previous swing, it's on the verge of a breakout of previous swing high. Even Cipla has shown a good signs of positive signs where a consolidation breakout was seen off late. I think one can look for a more stock-specific opportunity within the pharma names, where Sun Pharma and Cipla, looks good from a near-term perspective.
Okay, all right. Let's move on to another stock in focus. That is your India Mart Intermesh, because that stock has been reacting well to its Q4 results. Stock is up about 2% or so at this point of time. India Mart, what is your view on the counter, Ruchit? Because we are seeing a good profit spike of about 81% or so year on year.
So yes, but the stock does not seem to be an uptrend as of now. Price-wise, we have seen a significant correction. Momentum readings have got a bit oversold, so we may be witnessing some pullback move in the stock in the short term towards 2500, 2550. But no, a sustainable up move supported by high top, high bottom structure or a good volumes should be seen before taking any kind of fresh trades in the stock. So any existing long positions, if there are, then one should review the stock again when it comes around 2500 to 2550 range.
Okay, all right. Let's take another stock in focus. That is your Praj Industries, because it's been reacting negatively to its weak Q4 performance as well. 5% downtrend coming in for the stock, where we are seeing that the profit has slipped about 56% year on year, and revenue has also dropped about 15.6% year on year. What is your view on the counter, Ruchit? From 700 odd levels, the stock has sunk to about 480.
So the trend looks negative even now from higher levels where the stock has corrected, breached its important support, and then even in pullback moves in the broader market, the stock has not yet participated. So clear relative underperformance when the markets are doing well. That time also the stock is showing underperformance. So this does not look much positive. So low top, low bottom structure still continues. 550 positionally remains a very important resistance for the stock.
Okay, all right. Let's take another stock in focus, which is your Vishal Mega Mart, because the stock is reacting positively to its Q4 results. 5% uptick coming in, where we have seen that the profit has zoomed about 88% year on year, and revenue has also grown about 23% year on year. What is your take on the counter, Ruchit, for Vishal?
The short-term structure looks positive for the stock. Of late, the stock has formed a good support base around that 105 mark. So till that 105 is intact, I think we should see a slow and gradual up move in the stock, and it may even rally towards 125, 122 range. So can look for fresh buying opportunities as well in the stock, but with a strict stop loss below that 105 support for potential targets around 120 to 125 range.
120 to 125 range that we need to eye out for. All right, just one last question before we let you go, Ruchit. What are your top picks at this hour? I know you're bullish on defense theme, but apart from that, what stocks in particular are you watching out for?
So apart from defense, no, we spoke about the pharma names where Sun Pharma is looking good at current levels. No, this is one stock where we expect a gradual up move in the near term. So one can look to buy Sun Pharma over here with stop loss below 1790 for potential targets around 1870 to 1880. Another one of the PSU name which has seen some consolidation over last few days, one is NTPC. This is also looking positive, where a price up move, the stock gave a breakout, and last few days the stock now has been consolidating above its 200-day exponential moving average. So once we see any up move where the stock resumes its uptrend, then one can expect a good momentum out there too. So NTPC at current levels can be bought with stop loss below 347 and expecting targets around 390.
Okay, all right. All right, with that we have to let you go, Ruchit, but thank you so much for your time and answering our viewer queries.
Thank you, Lovisha. Thank you.
All right, let's take a quick check of the markets at this point of time. We are in a range bound session, and Sensex is up flat in the green at this point of time, and Nifty is also flat in the green above that 24,350 mark. However, on the other hand, if you look at the advanced decline ratio, declines are taking an upper hand at this point of time in the markets, and some of the sectoral indices which have not been supportive to the overall market sentiment, that it includes the likes of Bank Nifty index seeing a cut of about 0.1%. Other than that, Nifty Media index seeing a cut of about larger cut of about more than 0.5% or so. And the other hand, PSU banks are also seeing a cut of about 0.9%, which is nearly a percent or so. On the other hand, if you look at Nifty IT index, that has flipped into the green, 0.2% gains coming in there. And on the other hand, if you look at Nifty Pharma index, that is also exhibiting some good trends with about 0.1% uptick. On the other hand, if you look at the mid cap and small cap space, small caps definitely underperforming the headline indices with about 0.4% cut. So yes, so we'll watch out if there is any recovery in the markets going ahead. But with that, let's quickly move on to the next guest of the show. We have Kunal Shah of Carnelian Capital. Kunal, good morning. The picture we saw 6 and even 3 months back, it is completely reversed. Would you say that the positive momentum can stay for the next 3 months or so?
Good morning. Thank you for having me. I think it will not be as smooth a ride as we have seen in the last 15 days or so, for sure. There could be volatility because of a lot of developments that are happening around in our country here, as well as geopolitically in global markets. There's a lot happening, but eventually net the developments are positive for India, and structurally from 3 to 5 year perspective, there is no question that we will stand out and do good in comparison to a lot of other markets. But next 3 months or so, we could be in a state where there could be a little bit of volatility which should not be written off.
Okay. Kunal, given the kind of earnings we've had so far, are you happy, disappointed? What kind of growth estimates are you pegging for FY26?
I think so far the earnings have been decent. I think Q2 was the worst when it comes to earnings cuts. Right, Q3 saw an improvement over Q2 earnings, and Q4 so far, whatever numbers have panned out, have been much better than Q3. And we believe that earnings cut cycle is behind us, and at all in the second half we should see further upgrades to the earnings across different sectors, which have been the bellwethers for our markets. So earnings so far have been good, and earnings rate cut cycle largely is behind us. And in fact, we believe that we should be in an earnings upgrade cycle soon in the second half of FY26.
Okay. Would you expect a lower double-digit growth for FY26 then, or what are you eyeing out for?
Yeah, I believe expecting about 10 to 12% growth in FY26 from the base where we are in FY25, is not a very tall task, and it should be a reasonably, good ask from here on.
Okay, all right. Kunal, what about, where are you finding comfort in the market in present? Any sectoral indices that you're watching out for?
Yes, absolutely. I mean, there are pockets where there is valuation comfort and decent visibility of earnings as well. So, pharma and niche API, CDMO companies is one space where there is ample opportunity, and there is a structural tailwind on account of whatever is happening in the global markets, right? So, that is one space which for sure looks very interesting. Certain pockets of BFSI like life insurance, they have a lot of headwinds on the regulatory side for life insurance companies in the past few years. Despite earnings growing for them, we did not see much action because of the regulatory headwinds. We believe now more or less that is sorted, and life insurance again is something which should do better from here on. Pockets of NBFCs, will have advantage on the cost of fund size as liquidity has started to ease at the systematic level. So pockets of NBFCs also should do good in FY26 as liquidity environment improves and the cost of funds for them comes down. So that is other pocket which should do good. So these are few pockets, and then there are few niche opportunities in capital goods space as well, which are domestic focused and are having tailwinds on account of exports or import substitution are also, opportunities where there is decent visibility of earnings for FY26-27 and also available at decent valuation. So even that pocket looks very interesting.
Okay. What about the defense stocks? Everyone is talking about it. It's back into the trend also. And then we have border tensions, which is also giving out a renewed buying interest. Do you find comfort there also in terms of valuations for defense?
Valuation still, even after the correction, looks a little stretched across the basket. While there could be, certain niche opportunities where valuations comfort would also be there, but by and large, largely still, valuation is something, considering there is only one by a government, right, and a lot of developments happening, so. Still valuation and risk reward doesn't seem to be favored by and large for the sector as a whole in our view.
Okay. Kunal, since we are talking about defense theme also, do you believe that the market is still worried about the geopolitical tensions? I mean, what is the real risk that they are pricing in at this point of time?
I think obviously there is a little bit of nervousness as to what will happen, what's happening right now, and how will things pan out when it comes to historically. We have seen that, it does cause nervousness in the Indian markets. For sure, whenever this kind of scenario comes up, at the end of the day, any kind of uncertainty does give a jittery to the markets, right? So this is also one kind of uncertainty which is there. But as I said earlier, structurally things look very strong for India. Be it our liquidity which has improved, be our deficit, be crude, be whatever is happening on account of tariffs in US. Is all net positive for India. And there are a lot of companies which eventually will stand to benefit for from all these developments that are happening by. So uncertainty in the near term always causes volatility, and this time around should be no different. What it is getting priced in, we've already seen last weekend a jittery correction. We did recover after that. But only things when get clearer will be the time when it will get factored in the markets. Till that time, there will be uncertainty, which will lead to volatility.
Okay. Kunal, you did mention that, from a 3 months perspective also, there could be a little bit of wobbliness in the markets. But right now we are seeing three main positives. FIIs are back, even oil prices are at 2-week low already, and dollar has also cooled off from its significant higher levels. So what is the one risk that you are watching out? Is it the trade tariff contours that you are watching out for from the Trump front, or what is the real risk that the markets will be watching out for?
Yeah, I think earnings is the only thing that markets will watch out for. And I think, we are seeing a lot of delays in shipments because of these tariffs that are happening, which could impact certain pockets in Q1 earnings. We are also seeing globally a lot of capex being put on hold because of the developments that are happening in the global market. So one thing which we are carefully watching is actually the earnings. How they pan out, what are the kind of disruptions that are happening in the in the businesses because of the developments that are happening. So I think one thing to watch out for is the earnings in the near term, how they pan out because of these disruptions. Otherwise, as you also highlighted, structurally, there are a lot of things which are working in favor of India.
Okay, all right. Kunal, let's talk about sector specific right now. Auto stocks for a bit. TVS Motors has impressed the street with its March quarter performance, but Maruti has not. So how are you viewing the four-wheelers versus the two-wheeler space at this point of time?
I think PV cycle, will be something which will have, kind of a difficult year as far as FY26 pans out. But within the PV segment, companies which have lined up impressive lineup of new product launches will be the one which needs to be watched out for. When it comes to two-wheelers, I think two-wheelers is the segment which we like for next 12 to 18 months or so, and we believe that two-wheelers will kind of do good, and that will not kind of benefit only OEMs. That will for sure do good, but there are a lot of two-wheelers auto banks which have got dominant focus only on two-wheelers, right? That will also kind of do good because there are two things that are happening out there. One is obviously the content per vehicle increase opportunity for them is playing out. Also at the same point of time, there are few companies which are trying to get into passenger vehicle segment as well by increasing the opportunity size or 10 for them. So this is for surely the space which can do good other than the OEMs, which will obviously do good. So we are more positive on two-wheeler space than four-wheeler, except for when new product launches are lined up, which we believe should do good in the next 15 to 18 months.
Okay, all right. Kunal, you mentioned a range of themes that you are quite bullish on, but anything that investors should remain cautious about?
I think narrative stocks are something that investors still should be caution of. I think we have already seen a lot of correction in the last 6 months from September onwards. In a lot of narrative-driven rallies that were there. We still believe, there are a lot of narratives that are getting played in the markets, right? So one should be very wary of those kind of narratives and always pay heed to the valuations and earnings. Right, so I think that is one space, where one should be watch out for. Not to call out any particular sector per se, but generally wherever narratives get built and stocks run up only on the basis of narratives.
Okay, narrative stocks that we need to watch out for then. All right, with that we have to let you go, Kunal. But thank you so much for your time, and we hope that we connect with you soon.
Pleasure. Thank you.
All right, let's take a quick check of the markets. We have seen a good recovery at this point of time. Sensex is up about 150 points, 160 points or so. And Nifty is also above that 24,350 mark. So we have sailed into the green at this point of time. That comes as a big respite for the markets. What aided the market recovery, that is your Bank Nifty index, seeing a green of about, flat in the green at this point of time. Other than that, we can see Nifty IT index doing well. Nifty Pharma index posting a larger gain of about more than 0.5% or so. Nifty Real Realty Index with more than 0.5% coming in there too. On the other hand, what is limiting the upside of the markets, that includes the likes of Nifty Energy Index seeing a cut of about 0.1%, given that Reliance Industries is seeing a bit of a cool off after 2 days of consecutive day of rally. On the other hand, we can see Nifty PSU banks also seeing a bit of a setback at this point of time. On the other hand, Nifty mid cap and small caps, mixed trend, small caps underperforming, mid caps largely outperforming from the broader end of the markets. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for Closing Bell. We will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.